Hi, thank you very much for being part of the panel discussion this evening. Let me set the theme for the webinar, which I'm sure will be highly thought-provoking for all of us and the viewers. We all know that, and quite unfortunately so, that the startup space in India is facing a bit of a crisis. And with the funding gradually drying up, several entrepreneurs with bright ideas and innovative thinking set up a variety of startups for the last 15 years, and with many going on to employ thousands of job seekers, count Flipkart, Baiju's among them. The technology the startups have come up with has played a significant role in fundamentally changing how we live our lives. Now, all this is in danger of stagnation or collapse at worst. How did startups come to this pass? Is there a way of protecting them and ensuring that they don't disappear? What are the implications for India, which saw unprecedented activity in the startup space, with several turning unicorns before you could say Jack Robinson? These are some of the questions that the webinar plans to address with, and we have an expert panel in attendance. Let me start with Shweta Thakur, and let me introduce her to the panelists here. She's the founder and CEO of Wildermart. I hope I got the pronunciation right.
Yes, it is.
Based out of Bangalore. It's a Bangalore-based healthy and sustainable grocery store. It has grown into an omni-channel grocery store now. And the vision behind the startup is to make it easy for people to become healthy and sustainable. Ms. Thakur handles two main aspects of the business: curation and customer experience. Giving her marketing and branding career of over a decade, her passion is to make Wildermart a brand that people will love and recognize. She started her career as a corporate banker at HSBC in Mumbai, and since then has held multiple roles, starting from strategy to data analytics to sales and marketing. Post that successful banking stint, she moved to Bangalore and co-founded a communication agency. She was the creative director for 9 years, and she started her clean consumption journey 7 years ago. Thank you very much for being part of this panel discussion. Ms. Thakur, and let me now go to Mr. Vijendra Reddy Mutyala. She's the co-founder and CEO of Drink Prime Bangalore. Drink Prime is a very unique kind of machine, can I say that? It is India's first subscription-based data-enabled water purification as a service provider, bit of a SaaS kind of solution. And it is based out of Bangalore. It's a technology-enabled startup that uses a data-driven approach to help to solve the safe drinking water problem, or rather the issues with water, with drinking water in Bangalore, in urban Bangalore and the rest of the country. It provides subscription-based drinking water services with IoT-enabled water purifiers that constantly monitor water quality at all times. It was founded in 2016 by Mr. Vijendra Reddy Mutyala and Manas Ranjan Hota, who's also the co-founder and CEO. Rajat Sinha is principal Lend Den Club Alpha. I have to be very careful about pronouncing this word. Mr. Sinha is one of us. I hope I'm right on that, Mr. Sinha. He started his career as a journalist, and he launched an online magazine at the age of 17 to provide a platform for journalists to explore their skills. He now leads the team at Lend Club, which is a leading peer-to-peer lending platform that provides an alternative investment opportunity to investors or lenders looking for high returns with credit-worthy borrowers who are looking for short-term personal loans. It has over 1 million investors on board and has become a go-to platform to earn returns in the range of 10 to 12%. Mr. Sinha holds a bachelor's degree in science from the International School of Business and Media. Thank you, Mr. Sinha, for being part of this panel discussion. Let me now go to Ms. Surbhi Talwar. She's the co-founder and CEO of Happy Jars Delhi. She manages marketing and branding for Happy Jars, drawing over 15 years of experience building FMCG, fashion, and lifestyle brands. Her mission is to build Happy Jars into India's most loud food brand. And she hopes to transform the food industry's misinformation-driven narrative through clear, engaging, and transparent content that empowers customers to make informed choices. She has previously worked in London, Delhi, and Bangalore, and of course, Mumbai as well. And she also has worked with companies like Fab India, Wildcraft India, and Roll. She holds an MSc in marketing from a university in the UK. Thanks, Mr. Talwar, for being part of this panel discussion. And I will set the theme for the panel discussion now, but let me begin with a story. And I'm sure out of this arises a whole lot of questions regarding what's happening in the startup world. Several years ago, I was invited along with a few other journalists for a brunch session with Mr. Sachin and Vinny Bansal of Flipkart. So as we had our food and we started talking and in a very informal basis, I happened to ask Mr. Sachin Bansal, and I come from a very corporate reporting background. So for me, reading and understanding P&L is a daily affair. So I asked him a very innocent question. I asked him, how come you're not still profitable? And Mr. Sachin Bansal looked at me for a few seconds and said, our company can become profitable tomorrow morning if it wants to. It left me the question, why it has still not turned profitable. Now, that's a question that I would like to ask you later during the webinar. But as of now, let me come up with some statistics. According to a report, there's been a huge drop in the funding. The total funding in Q2, which means April, May, June, compared to the Jan, Feb, March, there has been a huge drop of around 33% to around $6.9 billion. So let us start with examining the reasons for the slowdown and how it has impacted individual startup like yours. I would like to begin the discussion with Ms. Thakur. Your thoughts, ma'am.
Sure. So I'll kind of comment on what's happening and then how it has impacted us. So I've run a startup for the last 10 years, and but this is my second running now. One of the things that at least I knew about business, but I don't come from a business family. I don't come from a business background. I had a job, and so in that sense, I was new to business. And for me, in my head, I think I always thought that business meant making profit, and that's why you go into business. And then in the last 10 years, I've observed and watched a lot of companies, a lot of these brands that I've worked with as part of marketing communication and stuff. And what I found was that, okay, in today's day and age, the term business, I think, has gotten substituted with valuation and investment. And, that entire traditional Indian business sense, and Indian businesses have had very many, business communities who have operated in very, very strong ways, which were pretty different from how the new age startups work. And to me, it's been very fascinating. I've actually been an outsider in that space because even my previous startup was not in the investment running. And so we were a small group of, people who were doing something that we were happy with. So it never kind of hit that space. But I've just been an observer and an outsider so far, trying to see, where is this going to go? And whether or not at the end of the race, like what happens, like, when you kind of hit that many customers, when you've hit that kind of valuation, at some point in time, I thought companies would start making profit. And like in your anecdote, you mentioned, like, so then why wouldn't they want to? If they could go profitable the next day, why don't they want to? Like, what does it prohibit growth if you become profitable? I don't know. So that's something that I would like to watch and learn, continue to watch and learn. But I'm still an outsider at this point in time, because for us, the new business is 1 year old. And in March, we raised a small amount of angel funding. And that was more of a friends and family round sort of a thing. So I haven't really hit the investor market right now. And for the kind of business that we are, because for us, the sector is kind of looking up, and this is where the trend will be. We are in the space of conscious consumption. So conscious consumption is going to be the future of food and of any kind of consumption, actually. So I would be actually very, very interested in finding out for myself, which I will in the next 3 to 4 months, I guess, when I hit the markets again, as to does it impact a trend on the rise or a consumer trend on the rise? Because our business is based entirely on a consumer trend that's happening right now. So yeah, that's from me.
Ms. Talwar, over to you. Two questions here. One is why is it that funding has slowed down? Number two, of course, the bigger question about why startups are not profitable. And therein lies another question. Why is it that the investors community aren't asking those kind of questions, or are they now asking those kind of questions?
I think they're starting to, and I think that's one of the biggest learnings of the last 2 years. And I think when the pandemic started, a lot of them, in fact, like Sequoia's letter, and I think there's been a letter this time from Bloom Ventures and others as well. I think the point is that when times get hard and that funding is going to dry up, that's when people start asking, what's going to happen to the money I've already invested in so many startups in my portfolio? I think in today's situation, the reason that money is drying up for people looking for fresh funding, perhaps, is because people are holding to be able to fund existing investments. And that's at least what I've learned from the market, is that while they already have brands that are going to find it harder to sustain, especially if they are in losses, most of them are, they're going to have to keep that cash reserve to be able to channel into existing brands, because otherwise that entire investment goes out the window. So I think new players or new raises are going to find it harder. Obviously, existing portfolio companies may still get that bridge if you've managed to prove that you're a good business, a solid business, and at some level they see that you will be able to turn into a profitable business in the long run. I think profitability is something that, and I kind of understand where Shweta is coming from, because I'm not from an entrepreneurial background either. And when I started in this, I'd already worked in corporates for 15 years, and it was unheard of that you would have a company that wasn't making any money at the end of the day. But I think the way investment has worked is they actually push you to make top line growth, because their next exit is also based on your valuation. So no one really wants profit. And in fact, it's very clear. Most investors will tell you business runs on cash, not profit. And that's why I think as an industry, we all get, if you're chasing the money, you will be forced to up your valuation. If you're upping your valuation, you can't save money at the bottom line. You have to keep reinvesting it. That's what ends up happening with us as well. In fact, we were profitable just pre-taking the investment round, and we're not anymore.
Oh, okay. Mr. Mutiala, can you share your thoughts on these two issues?
Yeah, first thing, thanks so much, Girish. So the thing is, my take on this topic is basically I just closed a funding round. I've closed like Series A.
I got to know that. Yeah,
led by Sequoia and OMPR just a month back, right? So I'm actually in the middle of the thing, and I've started raising it, right? So, and also this is our fourth round. I mean, we've been doing this capital raise from, I would say, from 2016. So we have seen a couple of trends, and we have seen what were the questions asked during 2016 and what are the questions getting asked, right? I completely agree with all the other people who have told the inputs. Obviously, the questions are coming to the profitability aspect of it, because the thing is, before it was majorly on the story. How big is this market, and how are you going to capture? Where's the stories and the questions there? But now, obviously, they are asking on the questions that how are you kind of going to take this forward, right? How are you going to be profitable? How can I exit? How can you become a unicorn, or how can you become an IPO or some exit, right? So those kind of questions are coming. But the point is, I would kind of just want to compare this situation in the kind of a .com boom, right? Where I know there was a lot of these startups coming up, but people just got valuations and money just having a website during that point of time, right? But the point is, that is the point where great companies like even Google or Amazon were built. So in that recession, right? Because they actually saw business as business, right? I mean, in the sense like, though a startup, if you see the first point of startup is it's a business. So business means it has to make business sense, it has to generate gross margins, and it has to make everything, right? So with this recession, I would think that there are a couple of companies who will be coming out of, would be gems coming out of this recession. And if you see also, I mean, though there is a downturn, right, there's still $6.9 billion went into this quarter. I mean, if I have to see the
positive manner,
So there are companies who have taken, and at least I would say 4 companies turned unicorn in this. 121 new startups got funded, right? So there is still hope that it is going to be good. But obviously the questions and the way investors are also dealing have changed.
Mr. Sinha, you are a very different kind of startup. I mean, I want to ask you whether those who have not been able to get funding come to you for a loan. So, but then still this question remains, how do you look at these two issues?
So there are two
I assume you have more ear to the ground than the rest. So,
so, you know, Learning Club started way back in 2015, right? And we've been there in the industry for about 7 years. It's an amazing, it's good that all of them pointed out that profitability is really important, because us as a company, we have been profitable for about 1.5 years now. And that has been the business fundamental that we always look towards, right? Business does not mean growing valuation, but actually creating something of value, which other people will really respect and, you know, kind of look forward towards, be it your customers, be it your investors. Correct. Your value should be towards both these people. Now, coming back to the fact that investments have stopped throughout 2022, I think we're comparing it with 2021, which I think was a very unique and a very different use case. And if you look at not just the startup ecosystem, but everywhere else, if you start comparing 2021, 2022, you'll see very different figures, right? But if you look at the fact that what happened before 2021 and how the growth rate in investment has happened, I think that we're still doing pretty good, to be honest, right? Yes, it has slowed down, probably from the expectation from 2021, and it will continue to slow down. There are a lot of questions, a lot of things that have happened and is happening across the world, be it inflation rising, be it the war, be it the returns that investors were expecting probably have not happened. Because of all of these reasons, over the next 12 months, the slowdown will probably continue, right? But yes, what I've also noticed is that the slowdown has actually happened at the late stage companies more than the early stage companies, right? So if you have a good idea, if you have an innovative product, if your fundamentals are correct, I still see investors being interested and looking at how, you know, marquee investors raising funds today, be it the secures of the world or there have been activities going on. People, when they have raised 14 billion to invest only in the India and Asia markets. So that's a significant number. That's much larger than what was happening before. What that says is that there's interest. Investors do want to invest. They're obviously not raising these funds just for the sake of it. They want to invest, but they want to invest in the right kind of company. Want to invest in the company which really talks and creates value. Correct. So I think that is going to be a factor. Sure, startups may have to take a different call who needs to have raise funds to actually survive. They may need to look at creative ways of raising funds. They may need to look at the fundamentals again, maybe look at the profitability again. But it will stay stagnant for some time, but there's definitely hope for early stage companies. And to be very honest, Learning Club itself has launched a fund of its own, a corporate venture fund where we are investing in fintech startups, right? So we are looking for innovative ideas, creative people, entrepreneurs with ideas and passion to actually, come up with good solutions. So, yeah, that's my
thanks. Ms. Thakur, I wanted to know, I'm sure you have spoken to quite a few investors yourself and startup founders. What I wanted to know was that, and taking from where Mr. Sinha raised this issue, was less due diligence done earlier, and now they are really getting down to the brass tacks, asking very tough questions than they were doing earlier?
Yes, I would think so. And that would be, natural, because when everything is going good for everyone, nobody really questions, terms and conditions like that, that is assumed to be working, So And also in terms of when you talk about due diligence, particularly the way people represent numbers, the way people, call, where does the marketing cost go? What is acquisition? What is an active customer? These are the kind of conversations that will start happening because, as I think in industry, the trend that has happened is like you kind of inflate a lot of things. I feel that the entire industry at this point in time is inflated, right from customer acquisition to maybe the operations, maybe to the efficiencies in systems. And I feel there is room for leaning down, like literally, to make leaner and more efficient systems. And probably that is where, if we have more efficient systems, we can have so many more. I don't think the investors are saying that I won't put in the money. I think the question is, who do I put in the money? Wherein I think that in the future there will be. Today, what is the exit? Today, everybody's exit is an IPO. And an IPO, who's taking the brunt of an IPO? The same customer who was getting, discounts earlier, right at the beginning of the cycle. So it's a cycle. The customer gets discounts, customers get acquired. And then at the end of it, the IPO and the shareholders will again be the customers. So I think somewhere either we've become very comfortable with that cycle and nobody minds, kind of going through that process. But I would really like it if we could build more efficient systems, because I'm a big fan of efficiency. So such big unicorns that are getting created, I do genuinely feel that there is room for doing that. But of course, that comes at a later stage, probably. Maybe at this stage, when you're still building and growing, you really can't focus on both the things together. Either you can focus on growth or you can focus on being efficient about it. I guess the startups which will be able to create that balanced journey in that would be the winners.
Mm-hmm. Ms. Talwar, I wanted to know from you, how do you really agree to the what Ms. Thakur wants to say, and how do you look at it? Do you think that number one, of course, the due diligence part of it, number two, about the valuations themselves, and this is a question that I would like to ask Mr. Muthiala as well. Are startups raising funds at lesser valuation?
I think to the first question in terms of due diligence, I think it's the more questions they ask, I think it is better. And I think while a lot of startups feel like uncomfortable asking and having to look at that data, I have never come across an example of a startup that has looked at that data and regretted it, because I think all these questions come from people who have done this across industries for years, and they know if they're looking for something and you don't have it, you should. So I kind of tend to view that slightly differently for Happy Jars personally. I think it is getting harder to explain because the metrics are slightly different today. So when they're looking at due diligence, they're not looking at vanity metrics alone, which is what was happening maybe a few years back, but they are looking at actually, is there growth, is there retention? And when you're talking about retention, how many people is that a good number? Things like that, right? So they are definitely getting more into the details, which is a good thing. I think in terms of valuation, that really plays on the market. I mean, the minute people talk, and I think a lot of it, of course, all of it is sentiment, right? If the sentiment is that, oh, you're going to have lower valuations, that is what will happen. And when people know that if they push for that discount, they'll get it, because all the startups are being told, if you're getting money, take it. Don't worry about the valuation today because money is expensive right now. You can figure valuations 2 years down the line when the recession's behind you. So I think that entire is a self-fulfilling prophecy almost. And yes, valuations will unfortunately have a slightly different look right now.
I remember the founder of Microland telling me once that I think one of the biggest regrets he had was that when he was being offered money, he only took part of it.
Yeah.
Right. And he said that, and I think at that time, Microland was actually in a phase where it was growing and needed more money, and investors were not coming in and offering him more money. So in that respect, I would like to ask Mr. Muthiala, how do you look at valuations, and were you able to raise money at the kind of valuation that you're looking at? You're fresh from a new series of funding, so that's the reason I asked you.
Right, Giri. So the thing is, I mean, at least from the previous experiences, right? It was as others are telling, right? It was absolutely on the segment which you are targeting, right? I mean, whether it was a SaaS, then there was some definite multiple that this is what is the valuation. Whether if it is a D2C brand, there's something else, and then when there is hardware, there's something else, and brick and mortar companies are something else, right? So basically, these standards are absolutely defined by the market, and I would say there is no complete correlation with the valuation, right? And that's where, if you see in the couple of years, edutech, I mean, it was skyrocketed, and a couple of valuations where they didn't even had any business plan ready, but still they got high valuations and all, because the market was taking there, right? So the thing now, at least at this point of time, what happened is people started asking the questions on your revenue. So they started saying that, what is the revenue? What is your projected revenue in the next couple of years? And then that's where, right? Before times, the valuation was like, it's a negotiation variable where what is comfortable to you and what is comfortable to me. Let's come to the point that, okay, I mean, this is the valuation and we are comfortable to it, right? It was exactly like that. And I'm telling you with experience, which I've done before. But now the point is, they see that, okay, what is your 3 years growth? Where are you trying to head? What will be your revenue? And then, for example, I mean, if this is the case, then they are also trying to see correlate the pre-IPO situations to post-IPO situations, right? How, for example, how this company will be valued in an IPO when these things, right? So basically, there are a lot of these return on capital put in, right? All the variables which they are measuring internally, and then trying to see what is that multiple they can give, right? It is not just like a before, it is a handshake before. Now they have gone into a little details on understanding how to value the company. And the best example is to learn from the IPO companies, right? You can see market tells you how to value it. And that is where they try to retrofit that into the startup ecosystem, thinking what is the future prospect of the growth, right? And that's how the valuation is done. And that's where, I mean, for us, luckily, I mean, the thing is, the vision and all was a big one. So we wanted to kind of solve it, drinking water problem for India, right? So that's why we have Sequoia, Surge, and Omdiar, who kind of, I mean, know the bigger picture. And then seeing the plan which we wanted to do, we want to reach 1 million households in the next 4-5 years, right? So that's the thing which they have taken, and then they've given a decent valuation where whatever I have expected is what I have gotten, right? I mean, and also, to be frank, I didn't want to get the company overvalued, because I know the problems of, for example, if I get overvalued now, and if I don't raise the next round at that valuation, my current investors are going to get affected, right? So these are all the things, because again, since we have tier 1 VCs, they told us that what is the right way of looking at the valuation, and that's how we were able to get a decent valuation.
Mm-hmm. I can see that there's a lot of sympathy for investors from the chat we have had. I don't know whether you're being very diplomatic about it, but I'll ask Mr. Sinha, how does he look at it? And another question I have for Mr. Sinha is fintech the latest flavor of the season, or did you consider edtech before that?
No, so I mean, since Lending Club is into peer-to-peer lending, right? I'll answer the second question first. So Lending Club is into fintech, right? And we understand this industry very well. So for that reason, we chose fintech as an investment sector that we want to cater to. Because as an investor, we don't just want to become a capital investor; we want to come as a strategic partner. And we understand certain domains within fintech very well, be it lending, wealth, regulations, right? So we can support the startup that we are investing in various possible ways. And that was the thought process behind launching Lending Club Alpha. And I've been part of the startup community for a really long time. I've worked with, Head Start, like ecosystem players as well, and tried to do my bit towards the startup ecosystem. So that was the thought process behind Lending Club Alpha. And we are looking to invest into fintech startups only at this point because we understand it very well, right? So it makes sense from that point of view. Coming back to the first question of valuation. So I was at an event yesterday, and one of the discussions that really came out was that everyone was kind of talking about valuation and the round that they have raised. There was no discussions about revenues, acquiring more customers, distribution, no strategic discussion that was going on. So, I mean, it's important that a startup does raise funds for sure. But I think this should be strategically done so you raise what you need, right? And that is very important. I was also reading an article where I got to know that one of the startups actually raised insignificant amount. I mean, raised the valuation to such a state that now they are not really able to raise further funds. Exactly what Vijender said, right? So I think what really is important is that two factors to it. One, you raise what you need to raise. Second, you value it to in such a way that is the right value for you and for your startup. And also it gives you room to actually raise further rounds for you, right? So I think that is the right balance that startups should play at. And that's what we look at as well. We understand that, so a lot of startups actually compare their valuation with how other startups are actually raised, but it's not really the same. There are various factors in play. You have products in play. You have your go-to-market strategies in play. A lot of things are in play, right? So you have to kind of think of all these factors before you actually set a valuation. But yeah, this balance is going to be very important.
Are the VCs or the investors looking at safer bets? Do you think that's a trend that is playing out now?
I wouldn't say safer bets. See, every investor understands there's risk, right? What they're trying to do is they're trying to, like you said, the due diligence time period has now increased. There's more scrutiny involved. Investors do understand there's risk involved. So they are okay to take the risk. But the ticket size, the check size probably will reduce, right? Along with the value, there'll be downsizing in terms of valuation at all stages, not just the early or the late stage, in all stages. But the ticket size will also go down. They will try to diversify further in order to improve or increase the chances of returns. And the due diligence time period will probably increase. There'll be more scrutinies, more questions asked. But everyone understands the risk. No one is trying to really avoid the risk, but just diversify the risk as much as possible.
Mm-hmm. Mr. Thakur, I want to know, let's deep dive into the kind of challenges that you faced when you launched the startup, and what are the lessons that you learned? I'd like to ask each one of the panelists after that.
Wow, there's so many lessons. I think each founder has a nice little book and diary that they can maintain on their own. But I think one of the despite being in marketing for so many years, one of the things that I have learned with this startup is, because this is a D2C business and it's the first time that I have come into a D2C space, and there was a stark realization that D2C does operate very, very differently from a B2B business. And so I am trying to, at this point in time, unlearn some things that I learned as a B2B founder to try and kind of fit into a D2C founder mode. And one of the things that I have learned, which I really value right now, is that the difference between customer acquisition and the billing and the retention, that part. So I would, as an outsider, like I said, I would scoff at probably companies and brands and say that, oh my God, so much discount, and you're just discounting. Like every D2C brand is just busy discounting a whole bunch of things. And what are you doing? You're acquiring customers. And I would really not value that, because I would think, acha, discount deke, if you've got a customer, then is that customer going to stay? Because if discount is the reason that they're coming in for. But one of the things that I've realized right now is that it's not the discount that they're coming in for. At some point in time, they will seek value from you. And if as a brand, you're unable to deliver that value at that point in time to that end consumer, they're not going to stay there, discount or not. And so hence, the understanding of growing the top of the funnel, as they say, and widening the top of the funnel, and that the process of moving the customers down the funnel is a different journey and a different ballgame altogether. So that differentiation between sales and marketing, I think, is something that I learned recently, very, very starkly, if I may say. And of course, one of the things that I have always struggled with, and I'm guessing a lot of startups struggle with, is people. I think talent is what makes or breaks any company, and especially an early stage startup, because you don't have the funds. So right now, one of my challenges is that, yes, I've raised some money, but now do I spend it on marketing or do I spend it on hiring the right people? And, both of them have to work again for me. So at some point in time, I'm still like working with a very middle range of, salary that I can pay. And unfortunately, if I go out into hiring, the salaries that the funded startups pay are incredible. So there's no way, younger startups can match that. So how do you attract talent? And at that point in time, I think for us, what works is that we are coming in with a purpose. So the founding team, and I think like quite a few of the startups here, we have a purpose of doing something and a vision of not just solving a customer problem, but actually a larger purpose of, maybe creating some kind of impact. And I think for us, that has worked in attracting the right kind of people, because then there's a value system match. But yeah, I think hiring is an everyday problem, and I don't think that challenge will change at any stage of growth, because if you don't have the right people, you will not be able to make a business at all. So yeah, I think people is something that I would say has been my biggest challenge.
Ms. Talwar, over to you. If you could share your experiences in launching this, your startup.
Sure. So Happy Jazz is actually a brand of health food. And as a result of the way that we came up on the brand, so my husband was actually a horse rider and he started making these recipes in his own kitchen. And then we decided to become a brand because we saw an opportunity. It was a very interesting journey for us. And I think we went through a lot of different areas of pain, including setting up things like manufacturing, because we manufacture everything ourselves, having licenses for that, getting into MOQs with raw materials, having storage, working capital is expensive for us. And on the other hand, obviously the marketing and reaching out to the consumers, acquisition. We were not D2C before the pandemic. Of course, a lot of the behavior has now moved online. So we not only have the acquisition logistics part of D2C to handle, but we also have retail and listing and margins. And, so there's, I think sometimes I feel like I'm leading or dealing with Nestle level problems at Happy Jazz level, which makes it complex at many different places. But I think the one thing we've realized, and perhaps it's to do with the fact that we've come from working backgrounds and we're not, straight into entrepreneurship. We've always had this kind of traditional view towards management of the P&L, trying to keep it lean. So we've had that from the beginning. And I think we've realized over time that as you scale, it gets easier and easier to lose sight of that. So where earlier you could be very tight on your P&L, very tight on your teams. Of course, I agree with Shweta, hiring, I think, is what keeps me up nights still. But I think it becomes harder for you to justify the rupees that you spend because you don't have an immediate sight on the revenue that you have when you're smaller. So as we scale as well, I think it becomes easier to start inflating costs and looking at inflated expenses without even realizing it, and not being able to drive the kind of top line that you want, because everything is an investment beforehand. Like you invest in teams and people and even retail partnerships today, and you hope for the results to come 3 months later. But the last 2-3 years have been so up and down that a lot of those assumptions haven't worked out the way that you would hope for. But I think for us, the biggest learning has been that while we find it difficult to stay as lean and focused on the P&L, it's the one thing that saved us. And I love this analogy that a lot of India is trying to build unicorns, and I'm just trying to be a cockroach. I don't want to go anywhere. I think we learned that in the last pandemic. It would have been so easy for us to have to shut shop the first day that the lockdown happened, because we had a factory, no product, no production. How are you going to sell? But we got through that because we just decided, and we weren't funded then, we were bootstrapping. And we just decided that, we're going to do this one day at a time, and 3 months from now, we will still be around. So for us, I think that learning has kind of crystallized and become a way of life now, is that we are even more stringent than we need to be on P&L.
Okay, thanks. Ms. Thakur, I'm going to come back to you on hiring later. I have quite a few questions there, but I would like to ask Mr. Mutiala about Drink Prime, AI-driven, SaaS-based. How's it worked out for you?
Yeah. So just to add upon what Ms. Talwar told, right? So people call us actually cockroaches of the thing, right? So I mean, our investors.
What is this about cockroaches now?
Yeah. So the point is, what happened is, I mean, when we started, see, Drink Prime started off as a personal pain point, right? I mean, my partner and me have roommates, and we did not get safe drinking water, right? We were using this 20-liter water cans, and the fact is 85% of the cans were not fit for drinking, right? And we had no other option than to buy a water purifier. Again, at that point of time, we didn't want it to. So that's where we saw that there was a problem in the thing, and we started off as a personal pain point, right? We've never imagined that, okay, this is a startup, I'm going to scale this up, there's a market opportunity, and literally, right? So we were in the weekends build this and then launched it. We had more than 10,000 subscribers using it, and that's when we decided that, okay, the problem is bigger, and we started, right? So that's when we started this and started understanding like a startup. Basically, we were hardware startup, we were a SaaS startup, and the point is, at that point of time, 2016, there were no one, even a hardware, who was talking about funding VC and all, right? So we never started this company or the headset of a VC and all, right? We started off as a business to understand, can I make, because there were people who were in need of this solution, and then our whole focus was, how do I connect that need? So it started like that, and then it took like three years plus, right? We were completely bootstrapped, because point is, since ours is a SaaS model, there is an upfront investment for us also, right? So there is a capital purifier which we need to buy, and then we need to go and put it at the customer place, and customer pays not even 5% of the cost. So apart from equity money, there were a lot of capital needed. We are a very high capital requirement company. And then thinking as a startup was never, and we never had an option that I will be getting funded by someone and I can, right? So we kind of figured out a way where we can bought in distributors saying that we'll do a revenue share. I went to all the dealers and distributors of purifiers. I said that you give me a purifier, half revenue I'll give it to you, half revenue I'll keep it, and kind of scale the whole thing, right? And it started like that. And then to close Sequoia, I took literally 2 years, right? From 2018, I've been speaking to them. They've been asking me questions every quarter. And then I went back saying that this is, I solved their problem, right? One day they were saying that, how are you going to build the product? We built, and next quarter we went. Then they asked, why is the CAC so much? Then we solved that problem, right? So it took technically 2 years to kind of get them. And the whole, once Sequoia and all came in, right, the whole journey was in a different level. So one of the learnings which I have actually had in this whole journey is, as I see the last 5 years, right, I've been seeing that every 6 months, the company started changing the whole structure of it, right? So whomever actually we were hiring it was coming to the point that after 6 months, either the requirement from him was going above, like the requirement from him to do the job was actually more, or the point is the company moved in another direction. So the point is, it was always at a point where we had to evolve, right? As a founders, as the number of people, currently we are a 250 people team, right? So when we were at 60 people team, and then when we are at 100 people team, and when we are at 200, right? The whole thing, the whole structure and everything is different. And then the point is, unless we evolved to that stage, right, it was very difficult for us, right? So what was the biggest learning is, don't even, I mean, though the vision and the purpose is there, which you want to target, but plan for 6 to 12 months, right? Because the point is, startups are so volatile and high growth that whatever the team you have built may not be the right team for the future, right? So try to build for 6 to 12 months. Don't think about 3 years, 4 years team sizes, right? So that's the biggest learning, and that keeps helping. And the other thing is, as a founder, if you don't evolve yourself, you're not going to be able to do justice to the company, right? Because as a founder, I come from very technical background. I have no idea about marketing, sales, and everything, right? Those all, I had to pick it up, right? But the point is, if the founders don't know the basics of those things, it is going to be very, very difficult to run the company. You cannot say that, okay, I'm a techie, so let me focus only on the product, right? So currently I'm working and sitting and learning how to do GTM. Technically, that is the level which founders have to evolve and pick up many skills. Unless you take the skills up, right, it is directly proportional to the skills you have, your startup. If you build your skills, your startup also will start getting those skills. So that's the another learning which I have in this past 6 years journey.
Mr. Sinha, what I can see is that there is far more respect for companies. When you look at a product, there was a point of time and say, oh God, this product is not good, and quality issues and stuff like that. I would openly criticize them, but with a lot more founders, with a lot more people, entrepreneurs launching startups, I can see a lot of empathy sweeping around. There's a lot more respect for the kind of issues that they face, and some of the companies which have made it big, we can understand the kind of pain and challenges that they have faced. What is it that in those companies which are invested, what are these founders telling you?
Well, to be very honest, you've just started. We have not invested in any companies yet, but I've spoken to over 100 startups over the past 2 months, right? And what we do see is that, I mean, these are amazing stories, right? What all three of them really mentioned. And what really matters is that why they have started what they have started. There has to be something that really drives them to create something. And what Vijender said, what both all three of them said, there's a background towards why they have started that company, and that kind of drive, because they face that problem themselves. It drives them to continue to really work towards that solution, correct? And when I joined Gaming Club in 2017 I joined as a product manager, right? And one of the biggest challenge at that point in time for us was to actually find the right product market fit. And we knew the business model, we knew what we are doing, but the biggest challenge was to find the right product market fit. And the reason we were able to build the right product, which has now grown about 200 times from the time we launched in 2018, was because we understand that pain point. And me traveling from an Asansol from West Bengal to Mumbai, to Kolkata and then Mumbai, I could see a lot of problems that a lot of people face today in terms of raising funds or getting funds just to survive in a new place, just to survive after losing a job, or various circumstances, right? We understood those problems. We actually were facing those problems ourselves, and we built a product for it, correct? And we were able to be successful. So when we talk to our founder, we try to find why they started that company. What is the passion that is driving them? It just cannot be, there's an edtech company which is doing really good, so let's create an edtech company. There's a UPI based payment company that is doing really good, let's create that. It just does not work in that way, right? Unless you really feel that the passion to actually create something, you'll probably end up doing something which is not necessary and which is probably available in the market, right? You're not going to solve a unique problem. So that's what we see. We do hear a lot of, and founders actually go to certain extent to sit down and talk to people before they even launch the product. That's very important, right? And that kind of, we talk to 3 different type of companies. There are companies which are pre-product, they're still working on at the ideation stage. There are companies which have just launched the product and they're trying to acquire new customers. There are companies which have launched the product and now they have customers and trying to create some revenues and profits, right? The companies at the ideation stage, actually, I mean, in all these stages, to be honest, do a lot of hard work to understand customer sentiments. They sit down with the customers, talk to them, understand the pain points that they're facing, and the solution that they are thinking of is actually going to solve or not, right? So we see all these things, and we believe that at the early stages that we invest in, the founders are going to be very important. The founding team is going to be very important, right? Because if the founding team is not strong enough, there'll be ups and downs, and I'm sure all 3 of them have seen those ups and downs throughout their entrepreneurship journey. You'll fall apart. You'll not be able to manage it unless you have that connection at the very early stages with your team.
Mm-hmm. Okay. Do you agree with him, and how have investors evaluated you? I would like to ask, any of you can come up with that answer for that. Whatever Mr. Sinha just said, have you had to go through all that?
Right. So one thing which I completely understood is about the vision part of it, right? So one thing which Sinha told rightly is that it has to be drive from the founders, right? So basically, I mean, people ask us also, right, why did you stay so long without funding and what was the reason, right? But the point is, the need was so important in us that we saw that so many people are facing this problem, and it is also a personal problem, right? That kind of a drive is very, very important, which basically end of the day, these investors didn't even had an answer to say why no. So many times we had to go persistently asking him ki, why are you not putting, right? So that drive is very, very important, which kind of every investor sees, right? What is the drive, why are the reasons they are doing, right? That kind of was very, very important for us, right? So whenever anyone gives us feedback, if they don't want to invest on our unit economics and all also, but the point is, the feedback they give us is, we really like you from the drive you have, right? And that is a very good benefit. I mean, whatever the positive aspect of that, right? And I completely agree. A couple of investors didn't even see what is my balance sheet, what is my P&L, right? At the early stages, like there were very great founder investors who have invested, right? Who just invested on seeing the drive on us, right? And it plays a major role, and it is a end of the day, after seeing all the data in your numbers and all, right? It is that feeling which they have to get, right? I mean, in the sense, like, I really like this company, or I really want to be part of it, right? That plays a major role in their decision. Otherwise, they try to come back with an answer how to say no. But though there could be some problems in your company, definitely there's something, right? But that is what ignites them, saying that, yeah, I like that. What are they doing? That struggle and all, right? They like the journey. That played a major role in our journey.
Okay. Ms. Thakur, let me come back to you on this hiring, which I told you. I was watching a web series the other day, and this person gets sacked from one of the Indian startups. And over a period of time, he launches his own startup. So coming back to this question about hirings, I was talking to a few investors, and they told me that, and I don't know whether Mr. Sinha agrees with that or not, about how as far as hirings are concerned, the investors are asking a whole lot of startups to actually come down on hiring. They say that you're overstaffed. I do agree that you're in the initial stages there, but then how do you look at this problem? How do you look at this challenge? When do you feel that you really need more, or do you think that this is there, that we should let's go and hire more people?
I think I'll go back to that problem of inflation that I was saying, and that's, I think, it happens because it's human tendency. If you have enough, you start to get comfortable, and if you don't have enough, you will hustle and hustle and hustle your way out of it, right? And that same thing happens. So at this stage, for example, you might just have 5 people in the company, and they will not complain about overworking. They will not worry about it, or they will not think about how many hours they spend or which is their job role. You kind of spread yourself and do whatever it takes to kind of make your company grow from one level to the other. Now, the minute that inflection hits a company and then money comes in, and I certainly feel that money is the changing part, because now that you are flush with resources, everybody tends to relax a little. And that's when it starts happening, where honestly, I have interviewed a whole lot of people who get and at starting stages of their career. I'm talking about people in 3 years, 4 years, kind of, because, well, that's what I can afford right now. So and I can see the amount that they're getting paid is not commensurate to the talent that they have. They genuinely, what has happened is freshers are getting such high salaries. And I have experienced this in my previous startup, because a whole bunch of people, and because we were still a startup, so you would do a lot of things and you would learn a lot more in that process. So anybody who is trained under me as a designer, content person, and things like that, they learned a lot. And the minute they went into a bigger startup where they got at least 3x the salary, they would tell me that I do 1 hour's job over there, and I have to spread that out into 8 hours. And whatever I was doing in your company for like half an hour, I have to spend 6 hours on that now, because literally the work spreads across the time. So I think the need is for people also to be a little honest about, can they take more? Can they really continue to contribute? Like, how at different stages of the company, how does contribution of people change, and how much do they still do? When does it become a corporate job? A startup which becomes very funded becomes a corporate job. I mean, we might think a corporate is some very old kind of a setup, but it does. So I have 8 hours, I have to clock in, clock out. These are my 5 deliverables. I will just do that much. I am not going to push more. So I think it's about the culture that you build, and like Surbhi was mentioning, if you have a lean mindset, if you as a startup founder, if you want to continue to have that lean mindset, you need to pass on that lean culture into your organization as you grow. And you need to continue to work like you still have limited resources. Yes, you have enough, you have the safety net to say that, okay, if 100 रुपए में नहीं होगा तो 200 हम spend कर देंगे हम per unit, but then at least start with that 100. Just because you have 200, don't just think that you have enough money, then what? I think founders and companies need to treat the investor funds as their own funds, because at the end of the day, somebody has put in a lot of faith in you to be able to deliver something. And I think we need to respect that and spend it like it was our money. Because when you're bootstrapped, you spend very differently than when you spend when you get invested. And that's something that I think needs to kind of get rewired probably.
So you think that what the investors community is saying is largely true? They get more funding, they overhire.
Am I going to get in trouble for saying this? No, but like I said, yes, I think so. Like when you have enough, you get comfortable. You genuinely do. And I won't blame it on any founders, because we have literally cried tears of blood in the starting periods, like literally every night you feel like screaming so much. And it's everything. It's because the paucity of funds doesn't just affect your corporate life. It affects, professional life. It seeps into your personal life. And then you see, that, oh my God, my friends are doing this and my friends are doing that. And what am I doing? Working so hard, much harder than, what my colleagues or my ex-batchmates and things like that are doing. And then what do I get at the end of the day? But yes, I think we do tend to start spending more. I've seen it in myself, because that, okay, there is also the the value of time, right? Like, so as long as you're like today, if I spend so much time haggling over this, how much money am I losing in terms of time? So time also starts becoming a factor where you start converting it into currency. So you need to know which battles have to be won with money, which battles have to be won, with something else probably. But yeah, I think we can be leaner and more conservative. And I think that will happen, because if the funding starts drying up, you're again hitting that place of bootstrapping with a larger, quantum of money. But you you'll still have to bootstrap that then.
Ms. Talwar, what I wanted to know, apart from your views on hiring, I also wanted to know that now that the funding is drying up, are you going to change or make a few tweaks so that the investor community actually takes you much more seriously than before, because the funding is drying up? So will your business model undergo a bit of tweaking? Are you going to make it much leaner, strengthen it in any way which you can?
I think I'll start with that and then go back to the hiring question. I think for us, like I said, I've never taken my eye off the P&L, and sometimes it becomes scary, and it has been scary in multiple points of time over the last 2 years. But I think the way that we actually, I see it as a welcome change, because it's almost like the investors are finally telling us what I have been hoping to live as a founder, which is a sensible business built on actual strong metrics. The only thing that we're trying to do, and I think that's sensible regardless of whether you have funding or not, and that ties into what Shweta was saying as well, is that if you need to build a business on solid ground, you can't have, let's look at unit economics. You can't have negative unit economics. You shouldn't, right? So if marketing is where you're spending a lot of the money, for us, we're trying to spend less on marketing, but drive higher revenue. And I think when investors look at you and say, it's the decision of should you be profitable or should you grow, those shouldn't be the two opposite ends of the spectrum. You should be able to grow and have some kind of positive bottom line as well. So one of the things we're trying to do is see where we can be more efficient. And I think for us, because we focused on it a lot, I don't think we can, I think we've done phenomenally well actually as a company, because we're only 22 of us today. And that includes all of production as well. So I think that's one part where we're very solid, but where we are trying to figure out is all the ancillary marketing, listing, where do you spend on driving new channels, discounting, which I abhor, unfortunately. As a D2C founder, you can't abhor it, but I really do. So those are the kind of areas that we are getting tighter at. But I've also realized that now is probably the best time to stop chasing the money, because exactly like everyone's been saying, if you have, and one of my mentors told me this, he said, "Tum bus chalao. Jab bus chalegi, to log aayenge." Right? And I think now is the time to start looking at that. So I wouldn't say I'm tweaking it because we want to get more favorable in the eyes of investors. I think I'm tweaking regardless of what does make us favorable in the eyes of investors, because we can keep hoping, and investors will still want that top line growth. But as long as we get there without having to shut down, the day after we, or one of the pitches, you realize you're not getting what you need, it should not be at shutting down level. Coming to, I think, the hiring part and the potential inflation, I do think a lot of companies do tend to have inflated hiring at the younger stages. And a lot of that is because you don't know how to drive the top line. So if you look at the behavior of a founder, it's like haath pair marne hi hai. So the easiest way to do it is to hire this subject matter expert, hire that one also, and you hope that all of them will start delivering and it'll affect the top line. Unfortunately, that doesn't always happen, right? So for us, it's been a case of where we feel that we can learn a skill, we learn that skill and we do it. And then we reach a point where it is absolutely impossible for us to do that job and our job. That's when we hire in for that role. That's kind of the logic we've tried to use. But I don't know, knock on wood for us, we've actually found that there is so much talent out there. And a lot of our team is actually people who are phenomenal at what they do. But I feel like they haven't perhaps gotten that opportunity before. So we've taken, for example, people who lead functions with us, they've actually not led that function before. But because we're confident of what we need, we're happy to train them into it wherever it's required, or let them have a go at it. Because that's how we learned, right? So I'm not looking at someone who's done 10 years of marketing, but the person who's doing marketing is doing something someone with 5-6 years of experience would be expected to do as well. So I think we've taken risks on the hiring front. And yes, they are more expensive now. And of course, if you could get a job, if I could get a job somewhere else that pays me 20 times more, I'd be like, bye. So you can't blame them for that. But I think it is absolutely, like Shweta said as well, it's about the culture that you build. So we're very lean and everyone does jugaad in Happy Jars. So much so that sometimes I have to talk to the factory manager and tell him, yaar, 2 samosa kha liye, it's okay. Don't worry, we'll pay for it. One is not a limit. So
yeah. That's true. Mr. Mutiala, does the Indian middle class value kick in here? We have always been known to work our way through less and less. Do you think that has actually kicked in for you as well?
Right. So great. The point when on the hiring aspect of it, right? So one of the things what happens, I wanted to just go back a step back, and I want to just put my thoughts on why we kind of end up being over hiring, right? See, what happens is when we kind of get in an investment, we show a plan that this is what we want to execute, right? And then the point is hiring cannot be done like at that moment, right? It is not possible to hire people at that moment. So obviously it is front loaded, right? So basically when I want to scale up like maybe 10x or 20x in a year, I would definitely need people to kind of come in now. Otherwise, the point is, because anyone who comes into the team takes at least a month or two to kind of reach to the stage, right? So typically what happens is in a couple of the startups, or if you see the high funded startups, what they do is they kind of hire great people. But the problem where the whole thing happens is on the business plan. The thing is, that is when whatever they want to achieve, right, due to some external factors or due to the market playing, right, what happens is the business plan will not be executed at exactly the way it is planned, right? So that's why what happens is the people will be too many in the thing where the 10x growth which you want to be expecting, you cannot reach to that. But the point is, number of people which you have hired for 10x growth, right, would be lasting, and that's why the over hiring happens. And again, there's a second layer of layoffs happen, right? So I would say that is kind of the learning which I have, at least I have observed in the market, right? It is not that key founders, I mean, at least my personal feeling that founders got in so much money and then I want to deploy, because at the end of the day, I have given a promise to an investor saying that I will grow this much and I'll grow your money to this thing, right? So it is my responsibility to build the team, because I cannot say that if I suddenly get 20,000 customers, if I don't have a team, right, how am I going to execute it? And the point is, investors has given us and gives us a target of 5 years or 6 years to multiply their money or 10x their money, right? So it absolutely happens, right? So that's where this all hiring and kind of firing happens, and that is going to happen. The point is, because the targets are set, and then obviously we have to take that risk. That is the kind of a take which I would see, right? It is not connected to the middle class, or I mean, I would say that I want to be lazy or anything, right? It is about the plan not getting executed because of the external factors, because it could be because of the competition, or it would be because of the market, or it could be government regulations changing, or it could be anything, right? I mean, suddenly some new law comes in, a finance thing, and the whole business plan goes for a toss. The point is, what will I do with so many people sitting on my in my company, right? So that's the thing which is happening. That's the personal take which I have, right? So we need to be cautious, but this is what is the reality currently.
What I wanted to know was, Mr. Sinha, what are the 5 things that you'd like to tell startups, given the new scenario where funding is drying up? I'm sure we're all attention on that.
No, I think whatever we discussed till here, right, are all the factors that are going to be very important for any startup to raise further funds or to survive in the current situation if you're not able to raise funds, correct? And I think one of the key points that we ended the last discussion on, hiring or team, is going to be very, very important. I want to touch upon the fact of what Shweta, Survi, and Vijay said, that when I joined Clinic early in the early days, we were only 10 people team, right? And we were doing multiple jobs. The same person was doing multiple jobs and doing as efficiently as possible, because that was the need of the hour at that point in time, and we were able to kind of sustain, grow, and now there's a team specifically managed with that entire domain or entire function. So it depending on the stage of your journey, you kind of need to do those jugards, you need to do those efficiency hacks and continue to grow, right? One of the proud factors that we have is that we have been able to achieve much larger number of customers supporting without having to increase the team, because we were able to build efficient systems and processes, bring in tools that can automate certain areas of certain processes, and being able to grow that way. Correct? We didn't have to exponentially grow the team as well. But what was important is to retain the team. So some factors that are important for a startup: hiring the right people, building the right culture, and retaining the people who are actually loyal to you, who actually see the vision and the growth with you, right? They need to be able to, it just can't be the founder's vision. Especially the founding, especially the first 10, 15 members of your team, right? That is very, very important. And I can see today also here at Learning Club, we have the few people that when I joined and who was there are still there, who are still continuing to be with the company and been able to take a lot of things on their shoulders and drive. People have been moving from departments to departments, leading that, building it, then moving on again. That is very important. So team is one of the factors. Focus on profitability, focus on revenue. That is very, very important because, if you focus just on that, what will happen is you'll see you are able to sustain probably by yourself to a certain extent. And I'm sure this will go away. It will never be a situation where this slowdown is going to continue forever. It will go away in some time. And that point in time, you'll be able to build and get the right valuation for your company. Correct. So I think these two are the major factors that I can think of at this point. One other factor that I can probably point out is find out that competitive edge within your product if you can. That is very important to actually survive, because a lot of the funded companies with a lot of money even today are going to otherwise outperform you, right? So if you're very small, if you're not able to raise funds at this point, you want to survive, that competitive edge is going to be very important for your survival.
That's interesting. Yeah. So before we wrap up, there are a few questions from viewers. One question is regarding how have government policies in recent times helped startups grow, or have they brought in new challenges? Who'd like to take that question? Any of you? Or in fact, each one of you can take that question as well. So,
well, yeah, I mean, I think the government have actually played a very crucial roles in growing the entire startup ecosystem. And not just the government of India, but every state government has now their own startup programs, right? Maharashtra government, for example, has given opportunity to startups to actually work on government projects, and they'll be given those projects if they have the right solution, right? So I think government has played an amazing, tremendous role in actually growing the entire startup ecosystem, and in a positive way for sure. I have not encountered any issues in that factor for sure. Not only the government, but also regulators have played a really key role in streamlining a lot of way in which startups are growing, making sure that it's the growth is sustainable for the long term and is in favor of the customers or in favor of the citizens, and that also is a very important factor.
Let me turn around this question and ask each one of the startup founders, Mr. Talwar, Mr. Thakur, and Mr. Mutiala, what is it that you expect from the government regarding policies for startups? Can I start with Mr. Talwar?
I think actually I'm quite appreciative of what they've done for our industry, because the FSSAI controls to a large part what goes on to food labels actually. And for us, it's been helpful because we are, as a brand, trying to be extremely honest and upfront about what goes into our products, what are the claims on the front, and every move that the FSSAI has taken has actually helped with that. I think the only expectation that I would have, or I mean, what I wish for is that operationally, a couple of things that sometimes affect us, I actually didn't expect them to affect us as much as they did. So for example, the mandate on the recurring payments had a huge impact on our business from an internal perspective. Not just from consumers having to pay subscriptions, that was one small part, but about us having to manage our bank and account and, payments going to our online suppliers and things like that. So sometimes I feel like maybe our service providers are not able to keep up with the government regulation on that. So there are bursts of pain in the middle of trying to grow that. But I think as an industry, it's been helpful for us at least to have a government body say that food needs to get cleaner, food needs to get healthier. You need to declare fat and salt and unhealthy ingredients. So that's actually been a really big plus point for us. Of course, it means we change our labels every few months, but other than that, I think it's been helpful.
Ms. Thakur, your take on that?
Yes, I think the space that I operate in is pretty similar to Surbhi's. So, there have been some very interesting things that have happened on the regulatory side for us because we're a 100% vegan store, and very recently, there are a lot of regulations. Like the space of being vegan is now getting regulated, like what you can call vegan, what you can't call vegan, and things like that. And I think where it is aiming towards is to create more transparency. It's going towards creating more awareness about what you're consuming, and therefore to be able to take it back to the source and be able to identify whether what you're consuming is good or not and things like that. I think that's fabulous. And I think what she mentioned about recurring payments was is a big pain operationally, of course, for us as well. But this whole piece of digitization and the way the tech has transformed money and transactions in India. I'm a huge fan of that. Like, I don't think it's that easy to walk around without your wallet anywhere in the world as it is in India. I have literally traveled without my wallet into other cities, and it did not create a hitch or a glitch anywhere. So I think the digitization has really helped businesses. And for us, even things like hemp recently got qualified as food, and things like that are changing. I mean, it's surprising. I have actually been pulled up at events by cops saying that, oh, you're selling CBD oil, is that even legal, and stuff like that. So so I think things are changing in that sense, and I'm pretty appreciative of that. And on the other side, also the opportunities being created for startups through, maybe obviously not everybody qualifies for grants and things like that, but the very fact that they exist, the very fact that you pitch for things, I think that sharpens our own understanding of the business and our own understanding of what we need to build, what is actually value, what is value in a business today, and what should you be creating. So if you look at your own pitch some 20 times, I think you see more about your business also. So I really like the opportunities being created for startups at this point in time, and I'm hoping there'll be more.
Mr. Muthiala, how do you look at it?
Yeah, so the point is government plays a major role in this, because we are talking about drinking water, right? So it is one of the basically, I would say, responsibility, or even the whole core of the government, right? I mean, because water is needed every day, right? So I would say definitely that government played a great role here, because with the Jal Jeevan mission and all these things, right? Trying to give tap to every home, right? They're beautiful initiatives by the central government, and also a lot of state governments also taken up, saying that I'll make sure that 100% of the people kind of get access to water, right? So they're beautiful work, because again, since it's a liquid which is the core of your life, right? So there are a lot of initiatives, a lot of things coming up, right? But the thing which I would definitely want support from the government side of it is because drinking water is coming into the category of 18% GST, right? So the point is, our mission comes to the point where we wanted to give water to everyone, right? So the point is, currently we are supporting 50% of the urban India, but the point is, if 18% that point is removed, right, I can really go to 70 to 80% of the urban India, right? So that is one of the things where I request, or maybe ask government to kind of relook at it, right, from our perspective. And also there is another problems, like there are a lot of these non-unbranded players in this market on water, right? Because they're the people who kind of sell some random stuff and saying that this is a water purifier and all, where it is very good initiatives taken by government, like NGT talking about, let me regularize that you cannot have water purifiers, RO based water purifiers, more than this water quality, right? So when they are taking such regulations, right, one of the requests is to kind of even check with the companies which are doing, right? The point is, if you put an RO ban, like with, for example, if you consider the impurities are 500 ppm, if you ban the RO, right, what is happening in most of the cities which you are observing is input water quality is not constant. The water quality keeps changing from every season to every point, right? Like when you see the summer season, the water is very different from the winter, right? But my point is, when I say that when I don't want to use an RO and which you completely stop using it, if, for example, if the water quality deteriorates, my purification is not enough. So I would request government to also see all these things, right? To observe these things and talk to people who are there in the industry and try to make regulations so that it solves the right purpose, right? Obviously, NGT is helping to stop the negative people coming in, but also it should not stop the right solution to get pushed, right? So this could be a couple of things which I would say as a platform to kind of share, so that we can talk together, and we are really very much open to even sit and discuss and whatever the data we have, whatever the data which we are seeing from the last 3 cities we are operational, right? We have a bulk of data which we wanted to kind of project and take the help of the government to push what is the right solution, right? And this is where I would definitely need the help. We would definitely be partner with the government in pushing this Jal Jeevan mission and everything, right? So that's the take from my side.
I have another question coming up. Are startups facing an existential crisis, or is it going far from a crisis, even a rosy picture? Let's start with Ms. Thakur. How do you look at it?
You will need to repeat the question. I don't think
are they facing are startups facing an existential crisis, or is it going far from a crisis, even a rosy picture? I mean, I'm sure you face an existential crisis every day.
Yes. I think being a founder is just a synonym for having an existential crisis and breakdowns 3 times a day at least. So, I don't know if you can generalize these things. Like, these journeys of companies and startups are very, very specific to the industry that they're in, specific to the cultures that they have. It's like, I mean, if there was a term for personal in a corporate space like that, it would be something like that. So I don't know if everybody is facing an existential crisis, but I do think that everybody is looking at correcting or feeling the need to correct, whether by choice or, by circumstance. But I think everybody is tightening up a little, and which is always good, because only good things come out of that. Like, I think great innovations come out of, that. I don't know if you understand Hindi fully, but Majburi ka naam Mahatma Gandhi, so you kind of create stuff when you have less. And I love that. Like when you were mentioning that middle class thing, I have actually gone to my investors and said, don't worry, I'm like a middle class housewife. I'm not going to spend money like, in any way that you think that I will. But I think that approach should be taken. I think Indians do. I appreciate the middle class values of not overspending and, sari ko bhi exchange karo for a bartan and, taking out value out of everything that you can. And for us, the business that we're in, where we talk about health and sustainability, all of our value systems go back to all the Indian value systems that are existing, whether it's about food, whether it's about frugality. Both of those things kind of work for us, and we are very, very frugal in everything that we do. So I think it's about minimalism to me, as in that is something that startups probably are adopting or need to adopt, and start going minimalist in the way that they operate. And if there is value, I think valuation will follow, revenue will follow, as long as you can focus and be very honest to yourself as a founder, that you are genuinely doing something that matters, genuinely solving a problem, and there are people who are willing to pay to get that problem solved. I think we have a winning idea, as simple as that sounds.
Mr. Lua, how would you like to react to this question?
No, I don't think it's an existential crisis, but I think we're definitely asking a lot of existential questions. And like Shweta said, I think it's good to do that. I think you make it a rosy picture depending on how you look at it, honestly. And like I said, to explain what cockroaches is, basically you will be there, regardless of what happens to the market or investors or money. I think our intention is to continue to survive. And sometimes the focus shifts from thriving to surviving. Perhaps it is one of those times. So yeah, I think asking the difficult questions now is probably the time, but it doesn't mean that we're all going to sit and be depressed about it, because if you get depressed as a founder, you have to leave.
Which is true. Mr. Sinha, how do you look at this question? And I would like to ask Mr.
No, I agree with what Shweta said, right? It's not, you can't really generalize it. And I don't think it's an existential crisis. There's fund available in the market. There's more than enough fund available in the market. And companies with the right fundamentals, with the right path to profitability will sustain for sure, right? It may not be easier to raise the kind of valuation that we were raising earlier, or to raise funds at this point, because now every investor is very cautious. but it's not impossible to raise anymore. I mean, not now, right? You will be able to raise funds if you need to raise funds. So it's definitely not existential crisis. Whether it's the road to a rosy day, well, it again depends on how you are kind of as a founder driving your next 12 months to actually survive in the industry. So that's my take on that.
Mr. on this, how do you look at it?
Even I don't agree that there is a point on this existential crisis, right? But the point is, at this moment, the founders, I would say, that have to question themselves, right? Like, why are they doing what are they doing, right? It has to boil down to that problem, because the point is, most of the times what happens is people start manufacturing the need. So maybe there could be not need, there will be something in the West which is working out and they want to kind of replicate it, right? So that's where the founder has to come in saying that, what is the need of my customer, who is my customer, and all these things, right? Even, I mean, I would not say that, I mean, the funding is kind of easy, but the point is it is not dried up, right? I mean, there are people kind of who will get very good valuations and very good funding also, but just that as a founder, you need to start questioning yourself that what are we doing, why are you doing, and how are you doing, right? So these three questions have to be taken seriously now, right? So it cannot just go with the trend which is happening in the market, that this set of companies are getting, so I'll do it and try to manufacture the need, right? So those things will not be possible, at least at this moment, right? So you need to have a definite problem which you are solving, and then your solution should be a little better or efficient, and also it should make business sense, right? Unless those basic things are set, right? I mean, I would say at this point of time, no investor will try to speak also, right, if these basics are not set. So if you have money which you have already raised, kind of keep it in bank, sit, I mean, go to the complete lean model, and go back. If you don't have a business model, you try to figure out and tuke your model or pivot to another model and try to understand the need and try to fix things, right? So that is what I would say. Yeah.
There's another question that just came about the government policy with investors funding drying up. So this viewer wants to know, do you think that the state governments, like Karnataka government has its own investor fund, do you think that they should actually increase that total amount? Would you like to tell the state governments about it, and of course the central government as well? Do you think that should actually increase? Even otherwise, do you think that should actually increase?
Yeah.
I think most of these funds are for early stage startups. So I think that question is pretty relevant here.
Right.
Sorry.
No, go ahead.
Yeah. So I had participated in one of the Karnataka, and the brilliant part is that if you actually, once you tune into the Startup India program and stuff like that, there is literally some grant or the other coming out every second, third day. At least I get an email about stuff. I might not qualify for some of them. Some might be in industry specific and maybe a skill specific and things like that. But there's a lot of action happening. And I had the opportunity of participating in one of them and going to a second, third round. I didn't get the grant, but what I appreciated was that it was a fair standing ground. It was a very fair playing ground, because typically what happens is when you are talking investor funds, there is a certain class of startups that go into investor funding or are even attempting to it, or whatever it is. And some people might not just be able to ever gather the confidence, despite the best of ideas and innovation, to actually land up an investor funding, because investors look at a whole bunch of things other than just the idea. There's a whole package that has to be sold as well. But in this grant kind of a system, what I really liked was, there were people from, and I'm talking about Karnataka schemes, and the other people on this thing were from Hubli and villages where they had brilliant ideas, and there was a fair playing ground, whether or not you knew the language. I was with a panel, and the panel would actually ask your preferred language before you started doing it. And I really liked that, because I think there's innovation happening, and Shark Tank thankfully showed us that there's innovation happening in every small city of this country, and that spirit of innovation comes from Jugaad. So as an economy, as a group of people, as culture, we are jugaad, and hence so much innovation happens. And I think these government schemes play a huge role in giving these grassroots innovations at least a platform, because once you hit that, then it's easy to kind of grow up further and get attention from other people and stuff. But that initial struggle for a lot of startups, which are not maybe in Bangalore, maybe in rural areas, is that struggle is real, and it's very different from what we have as startups. So,
Mr. Muthiala, you wanted to say something about it.
So the thing is, I mean, though the funding aspect from the state is actually picking up, right? I mean, there are a lot of these. Telangana government has started T-Hub, and Karnataka has, I mean, its own incubation, and a lot of Orissa has many of the other things, right? So again, I would say that it's not just about money, right? I mean, the other aspect which I would say where most of the startups can get help is basically opening up the government things, right? So there are a lot of problems inside the system also, where the point is the startups can become customer. I mean, government can become the customers for the startups, right? So this is the way where I would say maybe if governments can start opening up their problems which they are facing, and then give that problem to the startup, and then maybe give a little seed amount for that, right? But the point is, as a whole, the state kind of accelerates fast, right? So I would say that not just money point or grant point, I also would say that try to also give the problems which the government is facing, right, in that state. And every state has masterminds in the schools and even in colleges, right, who can technically come. I mean, we are the country who has the age, right, is all most of them are the youth, right? So we kind of, it would be better where government can open up the problems which they are facing and give it up to the startups, right? And definitely it's going to be, people will be coming up with a better solution, and as a whole helps the government in a better way, right? And money is not it. You can give many other resources, right? You can give land for subsidy, or you can give some technology which we wanted, like maybe a high AI ML kind of startup. Can you give me an access to your smart supercomputer to do all these things, right? So these are all, I think only government can help us in kind of getting it, right? So we really want all the state governments to open up another different levels of helping, not just on the financial side.
Ms. Talwar, a quick response to that.
No, I think absolutely. And in fact, to what Vijender was saying to us as a food manufacturer, and I think a lot of food businesses are based in Delhi because FSSAI is based here as well. It would actually be extremely helpful if they could help with things like regulation and licensing, because it's a very difficult part of what you do in food. And it is intended to provide hygiene and a certain level of quality of the food and manufacturing to the consumer. But unfortunately, what ends up happening is that they've dealt with large food companies for so many years who are used to handling complexity, have big legal teams, have people to mark off where different contracts are required, that startups like us do face that kind of challenge. So I think absolutely it's great for a state government to be able to take that up, also because as a startup, your first port of revenue is your home market. So you are technically contributing more to your state. That's just where it is, it's easiest in your reach. So yeah, it would be really helpful. More than the money, I think actually sometimes regulatory and other assistance is very helpful.
Mr. Sinha, how do you look at it?
No, I agree. And to what Vijender said, actually, there are state governments who have rolled out projects for startups to actually adopt and take up, right? Propose the solutions, and if the solution is accepted, then they are given the project to actually solve that problem. And I think that is super amazing, because not only do you get to actually solve a problem for your own state, but also able to actually, kind of see how your solution is working in the right environment in the world. And Maharashtra government itself has launched a project similar to that. I'm not able to recall the name at this point, but government has done such a thing. About whether the original question was actually whether government should increase the funding amount that they are doing. I'm not really sure about that, but I think the giving problems to solve real life solutions is, I think, the right way of going about it. And a lot of governments are doing that. I think they can just increase that to a larger extent, and that will be amazing.
Okay, I think it's time to wrap up. Thank you very much for participating in this panel discussion. Thank you, Ms. Thakur, Ms. Talwar, Mr. Sinha, and Mr. Mutiala. I hope there are several takeaways for the viewers as well as other startups. And I would like to thank the viewers as well for asking questions and participating in this webinar. Thank you very much.
Thank you.
Thank you
so much for having us.
Yeah, thanks.